The battlefield analysis. Right now, Kaspa is trading at $0.08771, and if you think this is just boring sideways action, you're about to get schooled. This isn't consolidation, this is warfare. Bulls and bears are throwing everything they've got at each other, creating the most dangerous and profitable setup in crypto. Look at this chart. Every single dip toward support gets met with buying pressure like clockwork. Every attempt to break resistance gets slammed down harder than a casino security guard. We're watching two armies dig trenches, and when one side finally breaks, it's going to be absolute carnage for anyone caught on the wrong side. Yesterday's prediction vindicated. In yesterday's analysis, I called out $0.082 as the line in the sand, the level that would separate the survivors from the casualties. I warned you that if KAS broke below that threshold, we'd see a panic cascade toward 8 cents or even $0.075 faster than you could hit the sell button. Guess what happened? The bulls stepped up exactly where I said they would. That $0.082 level held like Fort Knox, proving that smart money is accumulating at these levels, while retail traders are getting shaken out by the chop. This validation isn't just about being right, it's about showing you that technical levels actually matter when you know how to read them. If this level of precision analysis is helping you navigate these treacherous waters, show me some love by crushing that like button right now. These detailed breakdowns take hours to prepare, and your support directly fuels the research that keeps you ahead of the curve. Hit subscribe and ring that notification bell because missing one of these updates could cost you serious money. The coiled spring theory. Here's what most analysts are missing. Kaspa isn't stuck, it's loading. Think of this price action like a compressed spring. Every failed breakout attempt adds more tension. Every successful defensive support builds more confidence. Every day this range holds, the eventual explosion becomes more violent. We're seeing textbook accumulation patterns. Volume has dried up because the smart money already knows what's coming. Retail traders are bored out of their minds, which is exactly when the big moves happen. The longer this coil tightens, the more explosive the eventual breakout becomes. Look at the volume profile. During the last major breakout push, we saw massive participation. Now, crickets. This isn't weakness, this is the calm before the storm. Professional traders are positioning quietly while everyone else is distracted by the noise. The technical battlefield. Let's dissect this battlefield meter by meter. Buyers have drawn their line at $0.085, $0.086, and they're defending it with everything they've got. Every probe lower gets bought instantly. Meanwhile, sellers have set up camp at $0.093, $0.095, turning that zone into an impenetrable fortress. This creates what I call a pressure cooker pattern. Neither side can gain decisive control, which means when one finally breaks, the move will be swift and brutal. We're talking about moves that happen in minutes, not hours. The key insight here is that Kaspa touched 16 cents, 19 cents earlier this year before settling into this consolidation. That's not random. It's institutional accumulation disguised as boring sideways action, the same pattern we saw before Bitcoin's massive runs. Before I reveal my exact price targets and entry strategy, I need to know, are you positioned for what could be the breakout of the month, or are you still waiting for confirmation after the move has already happened? Drop your current KAS position in the comments below, and if this analysis is opening your eyes to opportunities you hadn't seen, that like button won't press itself. The 3 scenarios decoded. Here's how this plays out, and I'm giving you exact numbers because vague predictions are worthless when real money is on the line. Scenario 1, the bull explosion. If KAS clears $0.093, $0.095 with legitimate volume, not some fake breakout nonsense, we're looking at a rapid acceleration toward 10 cents, $0.103. But here's where it gets interesting. If momentum carries through that zone, 11 cents, $0.115, becomes the next magnet. That's a 25% move from current levels. Scenario 2, the sideways grind. Most likely outcome short-term, more torture. This $0.082, 9 cents range could persist for weeks, slowly grinding down impatient traders until they capitulate right before the breakout. Classic market psychology at work. Scenario 3, the bear trap. If $0.082 fails, panic selling could drive KAS toward 8 cents. $0.075 quickly. But here's the contrarian play. If that happens and we get a flush to $0.052, $0.055, That becomes the buying opportunity of the year. Sometimes you need to see blood in the streets to find the real bargains. My contrarian entry strategy. Here's my personal playbook, and this goes against everything mainstream traders are doing right now. While everyone's waiting for the breakout to chase, I'm positioning for the scenarios they're not seeing. First position, I'm watching $0.093, $0.095 like a hawk. The moment we get a clean break above that zone with volume above the 20-day average, I'm adding to long positions with targets at 11 cents, $0.115. That's not hope, that's probability based on historical breakout patterns. Second position, if we get the bear scenario and KS drops towards $0.075 or lower, I'm backing up the truck. That level represents a 50% retracement from the yearly highs, which historically has been where institutional accumulation accelerates. The key is having a plan for both directions instead of hoping for one outcome. The market doesn't care about your wishes, it cares about supply and demand dynamics. The hidden volume signal. Here's the signal. 99% of traders are missing. Volume patterns during this consolidation show classic accumulation signatures. Each dip is being bought with increasing volume, while each rally is being sold with decreasing volume. That's textbook institutional accumulation hiding behind retail confusion. Warriors, this is the level of analysis that separates profitable traders from the crowd following headlines and hoping for the best. Your engagement and support make deep dives like this possible, and I genuinely appreciate every single person who takes time to watch, analyze, and participate in building this community of serious traders. If this breakdown gave you clarity in a confusing market, smash that like button one final time and hit subscribe if you haven't already. Ring that notification bell because when this Kaspa breakout happens, you'll want to be first to know, not reading about it on crypto Twitter after the move is over. Before you disappear, check out my analysis on why institutional money is secretly accumulating 3 specific altcoins, while retail traders are distracted by meme coins. The link is right here, and it perfectly complements today's technical analysis with fundamental insights you won't find anywhere else. Until the next breakout, keep those stop losses tight. Keep those profit targets realistic, and I'll see you in the next one. This is TJ Crypto World, and remember, the market rewards patience and punishes emotion. Stay disciplined out there.